Hello, everybody. Mike Sorrentino here along with Bepin, and welcome to another edition of Market Pulse. And I don't even know how to do this, Bepin. I'm trying to take this seriously,
For those of you
but
that don't know who you're looking at there, that is a famous boy band singer. You may have heard him in the early 2000s, but that's good old JT, Justin Timberlake.
and I should know
Uh,
this. I'm 49 years old. I think he's around my age. I know the name. I've heard the music, but for some reason, I was staring at this earlier, and I said, Bepin, what the heck am I
who is
looking
this
at?
guy?
Yeah. Yeah, so don't sell in May. And there's that old adage that I know we talked about before, sell in May and go away. But I think this is a kind of a unique situation that we're in right now. I think the press right now is on it all the bad, scary stuff that we had to deal with for the last 4.5 months. I think they've completely shifted gears, and now it's all about excitement, opportunity, euphoria, enthusiasm, all around what we're going to discuss today. So let's get into it and talk about how I think the financial media tide has turned in many ways.
Maybe it's just a nice weather, man. People tend to be happier when the sun comes out, at
I
least in the
sure hope there's
Midwest.
a component of that. Yeah, well, it was a rough winter across the board. So
Yeah.
let's see if I can brush off some of my high school Latin at this point. Audente Fortuna Juvat. How close
You
was I there,
got it.
Bevan?
That would be
Got it. All
very
right.
close.
Excellent.
Yeah,
Excellent.
you got it. I don't think there's any
For,
Latin experts at home to judge.
I
So
sure hope not. Like I said, it's probably been at this point, let's do the math here, about 40 years since I looked at that. Fortune favors the bold. And if there's been a time to be bold, it's been late May going into early June. We've seen a couple strong IPOs already over the past few weeks, and everything. Look, there's a herd mentality in the IPO world. Initial public offering, the world that I used to work in many years ago at this point, taking companies public. All right. And then we've seen a couple big public IPOs this year so far. Cerebras is one of them. I think that was probably the most recent, Beppin. And then we've got the
Databricks,
bellwether,
I
the
think.
Databricks is coming up.
Hmm.
Um, we've got a monster, a monster coming on June 12th. Yes,
Yeah.
SpaceX. It's all over the news. Everybody's excited about it. Everybody wants a piece of what could become the largest IPO in history. I remember when Saudi Aramco went public, it was
Yeah.
at this point, maybe 6, 7 years ago. And I just remember seeing that IPO number that they were doing. I'm like, I've never, and I came from that world. I worked in. I was like, I've never, and never in my dreams would I've imagined an IPO that big. And it looks like SpaceX. We'll see. I don't know. We don't know yet.
Yeah.
But SpaceX.
I mean, recent updates are showing because this chart's a couple weeks old now, but recent updates on the Wall Street Journal are just these are all estimates too. I mean, it could exceed that on the first trading day by quite a bit.
Yeah, and if you look at, I can give you a little bit of the details. If you look at, I'll get geeky here for a second. Lead left on the IPO. What that basically means is the main book runner, the main bank involved is Goldman Sachs. But if you look past that, I don't know. I felt like every single bank out there that's in this business was listed. Everybody
Hmm.
wants a piece of this action, and they're going to do whatever they can to sell as much of it as possible. And look, I mean, I don't want to, we don't really know too much about how this is going to trade, and there are other IPOs out there this year that we have to think about too, right? It's not just
Hmm.
SpaceX. You've got Databricks, as you mentioned. Anthropic is most likely going to IPO. A completely other end, which may not be as exciting, but Jersey Mike's is
Yes.
going to go public,
I
right?
saw
I mean,
that.
so
Yep.
sandwiches. So it's a Blackstone property right now. They're going public. Look, there's so many IPOs, and what I can tell you, like I said, for working in this business, is that there's a herd mentality around IPOs, and you strike when the iron's hot, right? And
Yep.
that's what's going on. SpaceX is creating such a demand for this. Is that the bold, right? Favors the
Yep.
bold,
Yep.
and there's going to be a lot of IPOs. They're going to ride the coattails, successful or not. But if it is successful, watch what happens. You're going to see. I think. And Bev and I've been talking about this for months now. I think that this could possibly be the biggest IPO year that we've seen in recent history.
For sure. I mean, just looking at these two, the three that you see on your screen there in red, those are some of the largest. I mean, look at the next closest before them outside of Saudi Aramco. Um, Nowhere in the ballpark of the size of these companies. And one of the actually an interesting caveat around the SpaceX one is the amount of money they're raising. So the number you're looking at there is valuation, but that isn't how much of the company they're actually selling. That's just that the price of each share is based off of that total value of the company. Um, but I think it's blown out the next largest by like 5 or 6x in terms of money that they're going to raise from the IPO. So it's going to be a blockbuster summer. And I think SpaceX, like you said, already announced the day. It's going to be June 12th. So 3 weeks from now.
Yeah,
Uh,
yeah, it's gonna be here before we know it. So
yeah.
crazy times. And to put it in scale here, I mean, just to give you an idea, we don't need to look at all of the IPOs this year because, like I said, it could end up being a massive year. Just look at the top three that are, I think, kind of, I would say in the news, but expected to go around, kind of this AI boom slash SpaceX. SpaceX has become more than just rockets at this point. So
Mhm.
SpaceX, OpenAI, and Anthropic on the left-hand side. Now, again, these numbers are estimates. We have no idea what these companies are going to IPO, but I mean, look, all it takes is one successful IPO, and these numbers could expand dramatically.
Yeah.
Three companies, just three, are going to raise more money on an inflation-adjusted basis than all of the dot-com IPOs, all of them. Now, that in of itself is amazing because I remember the late 90s, all right, in the early 2000s, most of the late 90s. And like there were IPOs daily. I mean, there were literally every day something IPO'd. But the difference this time is that those three companies, Anthropic, OpenAI, and SpaceX, are generating massive, massive amounts of revenue, insane amounts of revenue. All right. The IPOs from back in the late 90s, most of those companies, like they were barely formed. Like they didn't have any money. They didn't have venture capital backing them. They didn't have Andreessen Horowitz in them. It
Yep.
was literally a bunch of dudes in a corner trying to sell something that didn't have a product off the ground. All right. So
Yeah.
there's a massive difference in not just the size, but also in my mind, the quality of some of these IPOs that are hitting the market.
That's a great point to mention that you could be looking at this chart and thinking, wow, that looks crazy that three companies are going to be a larger IPO than the entire cycle of it. It says there are 2,600 companies IPO'd. And Mike brings up a great point is that these companies, the ones that are IPOing this cycle here, have been around for quite a while, especially with SpaceX. It's been around for over 10 years. It's because of that venture capital world where they've been able to raise money privately and they're finally ready to enter the public market. So in their case, they're a mature business, maybe not at the peak. They certainly have a heck of a lot of room to grow, but this isn't a company that just got started, like Mike said, in someone's garage a couple weeks ago or a couple of years ago. It's a company that's been around for quite a bit of time, and I mean, SpaceX is a lot of their money comes from government contracts, so it's a pretty stable recurring revenue source. But switching gears here a little bit, going from the companies that are coming out later this year, let's take a look at how the companies that are in your accounts or that are already public and already being traded, how are they doing so far to start the year? And Q1 earnings, the season's almost wrapping up here, and I mean we're at like 90+% of companies have reported. And what we're looking at across the board is stellar earnings, earnings beats, revenue beats, beats on both accords there on earnings and revenue. And these are the fundamentals that Mike and I focus on. These are the numbers we're looking at to tell us where the market, where the economy is going, and what they're telling us from Q1 earnings is that it's going looking like it's going to continue. And not just looking backdated here. This is looking at Q1. This already happened. Looking at forward guidance here. So how are they looking at throughout the rest of the year? 88% of companies have raised their 2026 earnings guidance after Q1. Not every company issues guidance. So the ones that do, the ones that have issued some sort of guidance, whether it's a positive, negative, or maintaining it, 88% of them have either increased or maintained it. So they're expecting the rest of the year to either look how it's been going, which is very well, or in fact getting even better. And last night we got NVIDIA earnings on Wednesday of this week, and stellar across the board, beat on both chords on revenue and earnings. So the largest mover in the market is saying the same story that the rest of the market is, which is that things have gone really well and they expect it to continue going well for their businesses.
I mean, their numbers last night looked like typos.
I know.
They, I couldn't believe the revenue numbers.
Yeah, exactly. It's the changing of the technological world, where AI is now the new driving force of innovation. Um, and the earnings are there. That's the one difference between here and like the dot-com bubble is they were telling you about all the things that would happen in the future, all these things that they will in 5, 6 years be able to achieve. When they're reporting earnings, they're telling you what they just did over the last 3 months and their laugh out loud numbers. So things to be excited for the rest of the year, and things to really, the reason why we don't sell in May, right? We don't operate on calendars because calendars don't take into account technological innovation. And lastly, here we did get another piece, a big update that we believe is somewhat bullish for the markets, is a new Fed chair. So the Fed saga is finally wrapped up. It looks like Powell is going to hang on as a governor for a little bit, but that might not even be permanent. I think he's just hanging around until he gets like like a pardon, where it's like no double jeopardy. He can't come after me again for this stuff. So, but we expect him to probably be out as a governor at some time as well. But the new Fed chair, Kevin Warsh, we're just going to highlight some of the differences, some of the things we've already publicly said, whether in interviews or during his senator confirmation hearing, and some of the changes we'd expect from his Fed to Powell's Fed. First of which being is what everyone cares about is rate cuts. We'd expect rate cuts to accelerate. The Powell Fed was cautious, very data dependent. They held for quite a bit. We expect Kevin to come in and to cut rates much quicker than we've seen over the last year. And number two would be the balance sheet. The Fed holds a bunch of assets. They use that to stabilize markets or to stabilize like government yields on treasuries. The Powell Fed was going pretty slow in terms of unraveling the huge swell up of their balance sheet that happened during COVID. And we'd expect Warsh, and he's publicly come out. This is his whole thesis, is that he is going to let those assets roll off the balance sheet much faster, and in theory, even potentially sell. So, second which of being is those FOMC pressers, those post-meeting discussions that you see on the news. Those should be less frequent. He is going more so with we don't want to set expectations before we know what the future holds. So it's a way to avoid some volatility around a silly comment that you make. Or I mean, you remember the Powell meetings
Yeah.
where the market would move depending on what color tie he was wearing that day. So just trying
Bepin, I
to.
remember. Do you remember those? There's a chart that was going around for a long time that started with Ben Bernanke because it was after Greenspan, right? And so Ben
Mhm.
Bernanke and then Yellen, and they showed a chart over those years, the number of words per press release that was issued. They basically showing like how much Fed press releases were releasing in word count over
Mhm.
time. And it like you couldn't climb up this hill. You would need like gear. I mean, it was steep. It was so steep. And then Powell, same thing. Like to your point, they're just giving you more and more information. And it was like I think it was causing more and more problems. So you could be right. I mean, we could see worse going right back to maybe not Greenspan days where you just kind of say this is the way it's going to be and deal with it. He was a little bit harsh, but yeah, maybe there's somewhere in the middle there, and you might maybe it does make it better for the markets. I don't know.
And then number two is the SEP dot plots, the summary of economic projections that come out.
Mhm.
And I think we've even joked about it on previous recordings, talking about how inaccurate they end up being 1 year later. They're forecasting out what they expect in terms of rate cuts for 1 year forward, and then it never happens. And I think he's going with the method of why do these? Why make
There's no
ourselves look
value, literally zero
exactly?
value. Yeah.
Yep, exactly. So we'd expect those to be out the door. I think he's publicly said that. Another change to be expected is the inflation measure. Right now, the Fed operates off of a PCE, personal consumption expenditure. Um, and they go off the core PCE. It looks like they're shifting it towards a, not to get a little technical, but it's a trim mean measure. The key here being is it moves out some of the more volatile movers within inflation readings. This is to make sure that one-time price movements, whether it's an energy shock, whether it's a tariff related or something of that nature, isn't influencing long-term policy decisions. You don't want to have short-term events influencing you in the long run. So it's a cleaner, and obviously we've been talking about CPI or inflation measures being flawed. Hard to come up with a perfect measure, but at least it's a change. It's a way to hopefully get better, cleaner readings on the inflation. Then mandate scope. There's been a lot of talk about this on the news, but basically focusing on the two pillars of the Fed, which is price stability, keeping inflation low, and then full unemployment or full employment, not unemployment. You want unemployment to stay low. And less mission creep. So there's been obviously a lot of talk about the like climate change and the equality discussions that creeped into the Fed, which is just not their job. You know, you don't expect the Federal Reserve to be worried about how many degrees the Earth is going to increase over the next year or two. That's just really not part of their job. Their keys are price stability and full employment. So that's what they're going to hope to stay focused on. All of which we believe will be beneficial for the markets, primarily around that rate cut, cutting rates, and a lot of that's being framed around the AI-driven productivity boom. And I think we've said that for a bit, is that AI is more than likely going to be a deflationary force. So that's going to be the justification they are using to keep rates lower without expecting inflation to run hot, is that AI will allow us to have cheap money, but prices will keep coming down or staying stable. And with that, we would like to thank you for tuning in. We hope everyone has a great Memorial Day weekend, and we're always here if you need us. Take care.